All indices in the green right now. We have TBO Tek. The stock is on our radar. We had around 6% equity that, was traded on the exchanges yesterday. Ankush Nijhawan and Gaurav Bhatnagar, the co-founders and the joint managing directors of the company, now join us to discuss the future plans of the company, but also the large trade, which was interesting because Augusta TBO sold about 3.75% stake. TBO Korea Holdings sold about 2% stake, with buyers being the likes of ICICI Pru MF, SBI MF, and a couple of other domestic mutual funds as well. Thanks a lot, Gaurav and Ankush, for joining in. Let's go across to Gaurav first. Gaurav, the sellers, Augusta TBO and TBO Korea, while they're not classified as promoters, the letters TBO being on it tells you that there are some relations. So just wanted to understand what the rationale for them selling was, and they still hold a fair amount of stake in the company. Are they looking at paring their stake further, or is this for now?
No, so they are private equity partners.
Okay.
The naming of the firm TBO Korea is slightly unfortunate, and I think it happened because of some historical reasons. Both Afirma and TBO Korea are actually part of Afirma Capital. They've been on a cap table since 2018. So they've been in the company for 6 years, but absolutely no relationship with the promoter. They're not classified as promoters. They have nothing to do with us. It just happened that Standard Chartered Private Equity sold their private equity business to Afirma Capital back in 2018. So when that restructuring happened, it just so happened that the equity went into a company called TBO Korea, but there's absolutely no relation with the promoters.
All right, but they still have together, as of September, they had around 27% stake. This is Augusta TBO and TBO Korea. Even if you take into account the 6% that they've sold yesterday, they still have 21% stake. So could you, tell us what their plan with this stake is? Because this 21% is substantial. If they decide to, offload it, it can cause a bit of a, overhang on the stock, so to say.
I think they're down to about 15% now. They were 21% before what they sold yesterday. They're around 15% right now. Look, I think they're private equity players. They invested in the company quite a few years ago. And, they are sitting, they had come in at a significantly lower valuation back then. So we are not surprised that they chose to do this block yesterday. What we are happy about is how the market has reacted to it. Even though the trade happened about 7-8% discount to the previously traded price, we were pretty much back. I think we were down 1 or 2%, and today we can see that we are, actually up since yesterday. So I think the bigger point is that when this trade has happened, this is the first, last trade that has happened in the stock since listing. The good thing for us is that the market has reacted positively to it, and we haven't seen a significant pressure on our price because of this large trade. So on the whole, I think it is positive outcome for everyone, both the incoming shareholders and the selling shareholder.
Gaurav, Ankush, firstly, good afternoon. Thank you for joining in. That still doesn't answer the question, right? Have you guys had any conversations about whether your private equity partners intend to sell any further stake going forward? Has there been any communication in that regard?
No, not at all. Not at all. So there has been no communication, on certain things. I think it's important to remain arm's length. And this is one of those things. We absolutely understand they are public market investors, just like everybody else. So they have they have right and ability to create liquidity at a short notice.
What's also interesting is that, as of September, they were 27%. And in this quarter itself, they've offloaded about 12% stake. Basis what you've just told us, they still hold around 15%. So it will be very interesting to see whether that continues into the next few quarters as well or not. But let's move on to the second part of this. That supply was very well absorbed, partly because of the strong domestic liquidity that we're seeing, because a lot of the participants are domestic funds. And secondly, also because of the underlying macro trend of travel and tourism doing well in India itself. Now, the third quarter typically is strong for B2C travel companies, not as much for companies like yours, which are more B2B. So you have other quarters which are doing well. So let's go across to Ankush now. Ankush, what are the expectations of growth in this year so far? The first half, we've seen, GTV is growing at 19%, revenue is growing at 25%. The second half, what's your outlook?
So, first of all, thank you for inviting us today. From an outlook perspective for this quarter, I think for us, we are still kind of making sure that we continue our growth on the GTV. But what we are witnessing, there are some margins pressures, which are happening, especially on the air business. But Q3 typically is generally it's a decent quarter. I won't say it's the worst out of the four because of New Year and Christmas season. So I think we should be continuing at the same trends. But yes, we do have facing some margin pressures when it comes to the airline business at the moment. But yes, we are winning and kind of still growing on our GTV both for our air and hotel business.
Since you said it's not the worst, could you quantify how has the quarter been? And since you spoke of margin pressures as well, could you quantify that? What kind of pressure are you facing on your margins and why?
No, it's basically, I think, some competitive pressure, I would say, because I think some of our peers are obviously losing share probably, and that's why some kind of discounting is happening. But I think that's part of, business. We've seen this enough in the last many years. So nothing abnormal. And I'm sure as we finish this year, we will be coming back to the margins, what we have, which we have decided, and planning as we move forward.
So have you guys taken any price cuts as well in line with your competitors?
No, they are discounting, not price cuts. So,
No,
sometimes...
yeah.
So what does this do to your overall margins? I mean, the first half, you've managed to hold on to around that 18.5% mark. In the second quarter, at least, what happens to your margins by the end of this year? How should we look at it?
I think we should be...
Sorry, go ahead, Ankush.
No, I think we should be maintaining in the same lines, Mangalam, because, our hotel business is a very significant piece of our business, where kind of the mix is something which you see has changed over time, which will obviously ensure that we continue to deliver the margins which we have done in the H1. Yeah.
Right. The more interesting part is that I was looking at your presentation. You've spoken about artificial intelligence, technology, the use of all of that in lead generation, pricing, and all of the businesses that you undertake right now. I just wanted to understand if you guys have put any number to the efficiencies in lead generation and scale that you can get through all of this, because the world is talking about these things. You're incorporating this in your business model. How much of an efficiency can you see in terms of maybe increased revenue or better margins?
So very early days, though we are doing extensive work around incorporating AI in various parts of our business, but very early days for us to, quantify it in terms of what metrics are going to move by how much. All we can say is, look, the early trends are very positive, right? We talked about it in our last earnings call as well. We are running some voice bot automation solutions, which are showing pretty promising results over a few thousand hours of calling. But there is always, there is some loss in translation from doing a pilot to actually rolling out into production. So I'll not hazard a number on this, but needless to say, there is going to be investment in building out solutions around AI. And for sure, in the long term, it will lead to both efficiency and improvement in operations as well.
Final question, gentlemen. It's a two-part question, actually. Now, what is your airline to hotel mix likely to be going forward? Currently being 25-75. Do you see any change to that? That's part one. And part two of my question is, besides hotels and airlines, is there any other segment that you are targeting when it comes to growth going forward?
So, look, our hotels business is growing faster than our airline business. And hence, when Ankush was talking about, even though there is margin pressure on the airline business, the saliency is quite low. So overall, we do believe that hopefully from an EBITDA margin perspective, we'll maintain, margins. It's again, the saliency between air and hotel changes a little bit basis the seasonality as well. But yes, the hotels will continue to grow faster. So you will see that share of pie continue to increase. And sorry, what was your second question?
The second question was that besides hotels and airlines, is there any other segment that you are targeting for growth going forward?
Yes, so we are starting to build out our ancillary businesses as well, especially around experiences, transfers and car rentals. You would see, the travel agents really get involved in complex itineraries, right? The whole thesis is that when you go to a travel agent, you're really looking to book a complex itinerary. It's not just a flight and a hotel. So in that line, we are also starting to build out our businesses around transfer products, car rental products and sightseeing products. Very small today, so may not be making meaningful contributions, but growing at a fast pace.
Do you have an aspiration here? How much should it be as a part of your overall revenue? Because, I'm just looking at the spending of a person on travel. Majority of that is airline ticket and hotels. The rest is internal transfers, etc. So would your revenue mix reflect the spend mix of the consumer?
It will, but this is a big bet we are taking. And I think that's the change in consumer behavior that's happening. Over the next 5-7 years, you will see that experiences will dominate your travel spend. Right? You will start thinking of, in fact, it's already happening. You think of what experience I want to do, and then you decide where to travel to. And that's the bet we are taking. So, but it's a 5-7 year horizon. I don't think you will see very meaningful differences or contribution coming in the next 2 or 3 quarters.
All right, Ankush, Gaurav, thank you so much for joining in, sparing time and taking us through the road ahead for your company. Wish you good luck for the second half of the year as well. The management of TBO Tek on the road ahead for the company. Time for a short break. Up next, we get you a sneak peek of the process breakdown of India's chocolate market in our special offering, Nuts and Bolts.
CNBC has done a wonderful job in upgrading the whole business environment and spreading the information, and I think that they should continue this for the next 75 years. The equity culture, CNBC would be one of the biggest contributors to that. I know most people have CNBC running throughout the day or at least during the lunchtime. So that's a very, very big factor for the equity culture and therefore for the whole economy as well.